As the price of oil keeps climbing, will big producers finally start spending boatloads of money to boost their production? Let's consider the case of Core Laboratories, the technologist of the oil service space. This company helps oil producers analyze rocks and fluids in their reservoirs, showing them the best places to drill. You'd think business would be good given this run in oil. But at the end of June, Core Lab pre-announced a surprise shortfall, citing delays in the recovery of international field development activity. The stock plunged 10% the next trading day. So should we be concerned? Luckily, we got to check in with David Demshur. He's the chairman and CEO of Core Laboratories, as his company celebrated its 20-year anniversary at the NYSE this morning. Take a look. David, first, congratulations. 20 years right here on the exchange. Where was the stock 20 years ago versus now?
20 years ago today, Jim, we opened at around $13 a share, and today we're at $120 a share.
Now, I know your company cares more about the stock price and returning capital than anybody in the industry. How does that record stack up against the competition?
Well, if you look at other oil field service companies, in the past, they didn't pay attention to things like return on invested capital, free cash flow, buying back stock. They have become better stewards of their capital. And we'd like to think that they're following in our footprints on that. We're very proud of that.
Well, it's one of the reasons why I love you on Mad Money, because it's easy for our viewers to recognize it's apples to apples versus other companies in other industries, except for the OSX.
Yes. Well, if you look, we always measure ourselves against the OSX. In the last,
yeah, but the other guys don't care.
Yeah. But the last 13 out of 17 years, we've outperformed the OSX. So that's a badge of courage that we wear proudly.
All right, well, let's talk about current conditions. You came out at the end of June and talked about how there are really kind of what I regard as exceptionally, this is my own view, not yours, short-sighted national oil companies. People aren't doing what they're supposed to do with oil in the 70s, right?
Well, that is correct. And if you look at domestic activity here in the U.S., fabulous.
Right.
All of our operations here in the U.S. are doing great. Internationally, year over year, activity levels only up 1%. This gives me great concern about what crude oil prices are going to do over the next couple of 3 years. In the past, we've chatted about where crude oil prices should be, supply and demand for sure. We've had a 1.5% growth in oil demand over the last 3 years, where in the past 23 years, it's only been about 1%. So right now, we are seeing a big uptick in the amount of crude oil being used. My fear, Jim, is that when we go to later this year, into next year, and 2020, we see $100 plus crude oil again.
All right, now I want people to understand you do production enhancement, and a lot of that's been great in America. But the recovery, international field development, the recovery has not occurred. So you are actually in a position to talk about what happens to a well and to whole countries in terms of depletion. And if they don't start drilling, what do they have?
Well, Jim, if you look at some of the decline curves around the world, they are increasing. If you look at Mexico, peak oil production at over 3 million barrels a day. Today, 1.8. If you look at Venezuela, again, about 3 million barrels a day, now down to about 1.4 million barrels a day. We're also seeing sharp declines in West Africa, Angola leading the pack there with Nigeria. So as we look around the globe, you've got to ask yourself over the next couple of 3 years, where is that supply going to come from? All right, we're going to have some supply come from the U.S., but if we look around the globe, it's going to be very limited. I see higher crude prices in the future for sure.
And that's, again, because there really can be no lid. The big nations, the national oil companies, are who can really make a difference, particularly with deep water drilling.
Yeah, well, we think we're going to see over the next couple of years reinvestment back into deep water.
Okay.
You've got some big deposits there. If you look offshore in South America, Guyana, you've got Exxon there that's had their 8th discovery in their block there. You're looking at multi-billions of barrels of discovery there. We'll work there for the next 20 to 30 years for Exxon.
All right, let's talk a little more about what Core Labs does. Let's say you're in the Permian. This is an old field. We thought it was tapped out, but your company has found a lot more oil for these companies. Incrementally, it does matter for their operating margins.
Absolutely right, Jim. If you look at the Permian Basin, over 1 million wells drilled in the Permian Basin over the last 50 years. But now they're finding more oil than has ever been discovered in the Permian Basin. These are from the unconventional reservoirs, the shale reservoirs. And we specialize in telling them the quality of the shale that they're drilling into and what's the best way to recover the maximum amount of oil from those shales. A conventional field produces about 40% of its reserves naturally. A shale field right now only produces about 9% of its oil naturally. We have come up with technology that's going to increase that to maybe as much as 15% recovery. So look out over the next couple of years. You're going to be hearing a lot more about enhanced oil recovery from unconventional fields in the Permian Basin.
We got a new Supreme Court justice just appointed, very pro-business. We have a president that's very pro-business, very pro-fossil fuel. Has it mattered for your customers?
I think it has. If you look at their willingness to invest in this country for developing oil and gas, I think that's been a very positive stance. One of the things that you had earlier mentioned, internationally, we're going to see money start to be deployed there as well.
All right, now I want to make this point because it's not fair to your company. Despite the fact that at the end of June you talked about these national oil companies not spending, you're still making your numbers, basically. You never stopped putting up the numbers. You never gave us the variability of boom bust that we got so often from oil entities.
Yeah, we're a little disappointed. We would like to have higher international activity levels, and certainly our numbers would be better.
Right.
But you're right. We always concentrated on making the guidance that we give to Wall Street and those numbers, particularly paying attention to, as we started out with this interview, return on invested capital, free cash flow, and then returning all of our free cash back to our investors in the form of either a dividend or share repurchase.
And that's why we, everybody, have always liked Core Labs, because it's a real company. It's not a company that's rolling dice trying to figure out whether you got the oil or not.
Jim, when we listed here, we had 86 million shares outstanding. Today, we have about 44 million shares outstanding. We've repurchased 42 million shares with our free cash flow and have paid a dividend, which is right now somewhere around 2%. So we have been great stewards of capital and returned that to our shareholders, and we've been rewarded with a very nice share price today of $120.
Excellent. I want to thank David Demshur, Chairman and CEO of Core Labs. Congratulations again on your 20.
Thanks, Jim. Thanks for having us in Mad Money.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.